So we give couple of more minutes to little more people to join in, else we'll start. I think we can start now. Good afternoon and good evening to everyone who has joined in this session today. A very warm welcome to you all to this first webinar on focusing on risk and mitigation strategies of SMEs in Kenya and in general. And this is the first webinar in the series of webinars that we are going to have focusing on SMEs in Kenya. Before we start our session, I would like to take you through a bit of housekeeping rules. The session will be of 1 hour, 15 minutes. That will be including the question and answers. To ensure better audio quality for everyone, the participants or the audience has been muted. And you can submit your questions through the chat feature, and we'll pick up some of the questions during the session. So feel free to add the questions as and when you come up with them. The session is also being live streamed on our YouTube channel. So to watch that, Britam channel needs to be subscribed. And at a later time, post the webinar is over, the recorded version of the webinar will get, it will be available on our YouTube channel. To start with, to introduce myself, I am Sarita Mohanty, of ILO's Impact Insurance Fellow, and currently on secondment to Britam to work on to provide my technical advisory on creating some innovative and relevant solutions for the low income segment and the emerging consumer segment. Prior to that, I have more than a decade's experience in the Indian insurance space, in the life insurance space, primarily in the capacity of a product manager and a project manager. Now, as I mentioned earlier, today's discussion, or the focus area of discussion, is on the risks and the mitigation strategies for the SMEs. As I said, its focus is on Kenya, but we will be focusing on other parts of the world with our experts being there. So to discuss on this, we have our esteemed set of panelists with us, and I'll right now introduce them. We have Ms. Frida Owinga. She's the founder of Passion Profit, a people and enterprise development organization. She is a certified business advisor and has been working with individuals and organizations across sectors and geographies for more than 25 years. Welcome, Frida, to this session. Next, we have Ms. Vivian Orr. She is the SME Banking Advisory Services co-lead for Middle East and Africa with IFC's FIG Advisory Services. Since joining IFC in 2005, she has worked across African nations and with numerous financial institutions in designing and implementing strategies that improve financial services to SMEs. And in her current project, that she is working on includes banking on women and agri-finance. Welcome you, Vivian, to this session today. Next, we have Mr. Gregor Jaller. He works with GIZ as advisor in the sector program, a global initiative for access to insurance and financial systems development, where he's focusing on development of insurance markets for MSMEs as one of his areas of work. And prior to that, he has worked with various financial institutions in the inclusive insurance space. We welcome you, Gregor.
Thanks, Savita. Thanks for having me.
Yeah, thank you. And lastly, we have Mr. Saurabh Sharma. He is currently the Director of Emerging Consumer Business at Britam. Prior to that, he has worked in the inclusive insurance space in advisory and project management capacity across South Asia and East Africa. Welcome, Saurabh. So now that we have kind of introduced ourselves and the set of panelists with you, we would love to know a little bit about our audience. So we would like to know which all sectors you all are, associated with. So we'll do a quick poll of 30 seconds. And if you can just choose the sectors you are, associated with. I think we have got a fair bit of idea. I mean, it's predominantly banking and insurance, and of course, consulting and the other sectors. Well, it's a mix, but nonetheless, the focus is from banking and insurance mostly. Thank you so much for participating in the poll, everyone. Now, before we start the discussion, I would like to state some facts and figures about the SME space in Kenya. While these facts and figures are for Kenya, but they majorly or broadly reflect the same kind of scenario in most of the developing countries across the continent, and to a certain extent across the other continents as well. So SMEs constitute more than 80% of all the businesses in Kenya currently, and they kind of generate around 30% of the jobs annually. And in terms of GDP contribution, it's 33% or more even in terms of GDP contribution. Now, this is the positive side of what SMEs contribute to our economy. On the flip side, almost 400,000 SMEs shut down in Kenya with an annual or rather failure rate of around 75% within the initial 3 years of their operation. One of the major reasons cited by these SMEs for shutting down are shortage of operating funds. Almost 70% of these establishments use their own personal savings or family funds as a main source for their startup capital, while majority of them have bank accounts or they transact on a personal level with with the banks, but very few, merely 4 to 5% rely on banks when it comes to their businesses. So these are some stark facts when we see versus what benefit they give to the economy, to what they are getting out of it. Now, there are various risks that they go through. Some of the major risks that they go through could be financial risk, credit risk, business interruption risk, liability risk. Now, these are the broad categories of risk, but underneath them, there are various other risks that they face or challenges they face on a day-to-day basis, which kind of hampers their ongoing business. So, we need to delve a little further on this and discuss about this. And as I said, these are the broad categories of risk, which might be same across all countries, but the magnitude of each of the risk might differ depending on the factors of each country. Now, to discuss on this a little further and about the various risks and challenges the SMEs face, I would like to first invite Gregor to share his thoughts and views and insights on the challenges that he thinks these SMEs face, especially given his experience in other countries beyond the African continent. Gregor, over to you.
Thank you, Sarita. Let me start a bit broadly about capacity building and awareness aspect, because we and in particular myself working for development cooperation, we are doing a lot of capacity building, awareness raising in the SME finance space, and also in the insurance space. And I think that is that's totally correct, and this is something that needs to be addressed because there is still a huge lack of knowledge, of awareness in that space. Having that said, I think one very important aspect that tends to go missing there is that when we talk about these issues, we always focus, or we tend to focus on the SMEs, on the demand side. Having in mind, if basically we teach them well enough, and if we make them understand, then many issues circulating around risks will be solved. And I think this is wrong. I think it's the SMEs as much as the financial institutions, including insurers, who need to build up their capacities, and who need to better understand also and get a better knowledge about what's actually the business case and the business of these SMEs. That's, I think, my first point. Secondly, especially again when we think about insurance, it's not just a question of awareness, and capacity is also a question of trust, because, and often rightfully, there is a lack of trust, not just at the end of SMEs, but also on individual consumers. And that is in many cases justified, because the insurance industry in some countries have not always done a great job. And these bad experiences often travel much farther than any positive experience, often over generations. And I think that's something we need to take into account. Also, when we have to see that for insurance, again, let's say the value proposition, it's a difficult one. It's much more difficult than, for example, loans. I mean, you kind of expect people to pay something on a regular basis, and to maybe getting some of that back if something bad happens. So this is much harder to grasp and much harder to understand than a loan, where you get money right away and then have to pay back little pieces. And I think one last thought on that, since I saw in the poll that the majority here are either bankers or insurers. I think the link between financial institutions and insurers, again, that's a global look. That might not be the case in Kenya, but looking globally, I think this link is not as strong and not as natural as one may suppose. We still see globally very few partnerships between insurers and financial institutions, and those partnerships we see often focus on let's say very limited risk management parts and very let's say basic insurance products such as credit life. And I think this is a field where much could be improved. So maybe so far my first thought on that.
Great. Thank you so much, Gregor. I think your point on insurance being an intangible, hence the resonance with a product like insurance is pretty low. So it's very important for the sector, any player for that matter, be it an insurer, be it other financial institution who are trying to serve the segment, to understand the businesses better before giving them any solution. And as you rightly said, the collaboration between different institutions is also a key to reach out to this segment, because nothing can be done in isolation. And given the kind of contribution this sector does to the economy, if they grow, we all grow. So it has to be a collaborative effort and not the other way around. Thank you so much for your initial thoughts.
May I just add one additional thought, because you touched that. And especially when we look at SMEs, I think one mistake we often do is to comprehend SMEs as like a one sector, and the truth is it's much more complicated, and the SMEs are prone to a lot of heterogeneity. It's not that simple, so we have to look very specifically at what sectors are they operating in, what characteristics do they have, what location. I mean, that's all things that very much influence the risks they face.
Totally agree on it. So SME is a broader sector or set, and under that there are various subsets, be it manufacturing, be it hospitality. So there are various subsets under it, and every set has its own sorts of challenges which needs to be understood before we cater to them. Thank you so much, Gregor, on your initial thoughts on that. I would like to now move on to Vivian. Vivian, based on your experience across the continent, do you have any kind of visibility, or you can share your thoughts and insights on what are the specific kind of risk in other countries apart from the generic ones, what we have seen in other countries SMEs face, or the challenges particular to their countries they face? Any thoughts and insights on that?
No, thank you, Sarita. So as you said, I work with IFC, and the program that I work with supports banks in capacity building. So I agree with Gregory's comment around the focus at times being unfairly on building the capacity of SMEs. We've done studies in the various countries. We've worked with about 30 countries across Africa, and currently I'm also looking at Middle East. And the challenges we find are not dissimilar at all. We did a recent survey in Kenya because that's where the focus is. And what we found surprisingly was that access to finance was not necessarily, and this I think is particular to Kenya, was not necessarily the biggest constraint. The biggest constraint was really access to markets. So can they find customers? Can they compete effectively? How can they respond to trends? The other challenge we do see, and this speaks to the SMEs, is around capacity. Because most people go into business without necessarily having the management skills or the financial management skills that will enable investors to really see it as a viable business. You talked about the number of businesses that collapse after 3 years, and what, based on the training that we do with SMEs, for example, we had a program where we were training about 100 women entrepreneurs. And when we start the training, we'd ask, how many of you need funding? And, you'd have about 90% saying they do. By the end of the class, when you've taken them through financial management, managing your debtors, you're managing your stock, making sure that you manage your cash flow, the number would, be almost a third of that. So I can't overemphasize the need for capacity building. The other challenge, and this was also based on a study we did in South Africa, was just looking at the business environment, looking at the legal and regulatory environment. Very few SMEs are formalized. Looking at the Kenya National Bureau of Statistics study, I think it was 0.01%, and that's sort of registered with KRA and the business registrar. South Africa, for example, it's 14%, and we find that trend right across. And usually it's because of very onerous regulations, the cost of registration, tax compliance as well. The fear that once I register, then I'll be hit by bills that I can't manage. So there is a lot of work that needs to be done outside of the SMEs themselves, but I feel there still remains a strong role for capacity building, and just because that also helps in terms of creating awareness of the different products available, the different supports that they have. So very similar challenges right across. And I think one important point Gregory also made is we also have to sort of segment SMEs. The challenges we see with the micro is very different from those that are informal, very different from the small and the medium. For some at the startup stage, finance may be the bigger challenge. As they grow, it becomes the whole issues around the requirements on regulation, around being competitive, around access to technology. So it's very important to sub-segment them, and then based on that, develop policies or products for each particular segment. Thank you.
Thank you, Vivian. That really makes sense. As an like one is financing or access to finance, as you said, it's a very imminent risk. That is the key to for an SME to come into the business or continue. But we tend to kind of ignore the other parts, like as you said, capacity building or awareness of the businesses to the investor base, basically. So for them to create a better reach of the product so that they have better markets and all. So it's totally understandable, and appreciate your thoughts on that. So moving on to Frida. Frida, based on your experience in the Kenyan space per se, you have worked across other countries as well. But your experience, if you can share your thoughts and ideas about the risk and challenges specifically in Kenya, if you can help. I'm sure they are not very different from what Gregor and Vivian mentioned, but nonetheless, anything specific to the Kenyan market? Yeah.
Thank you very much, Sarita. The reason I'm laughing is because the Kenyan market, I'm glad you asked me about the Kenyan market. Again, just like it was said earlier, the SME, grouping everybody or all the business owners as SME is not very helpful because it's a very, very broad sector. And broad sector, not even in terms of the manufacturing and the different kinds of things they do, but it just becomes very complex to comment on SMEs because it's huge. But based on our experience with the people that we work with, what we've noticed is one is not access to capital. There's a lot of capital in Kenya because every other bank is giving up to 10 million unsecured loan. So you wonder why they're not taking it. So I like what Gregor said earlier. It would be helpful to look at both the side of the organization that is supporting SME and the side of SME also. There's a lot of assumptions, and the assumptions are there are a lot of assumptions that are put on SME. The story of access to capital and access to markets has been there for a long time. But if you're providing the right capacity building, then they need to understand value propositioning. They need to understand the solution. We have so many problems in Kenya. Why can't we create solutions for the problems that we have? So that, because if we solve the problems that we have for people who are willing and able to pay for it, then the access to market thing goes away. But the businesses that have been created are not aligned to the problems. And the reason they're not aligned to the problems is because the reason people are getting into business is very different from the reasons why people do research on business owners. So the complexity is so wide and varied because the tools that are being used on SMEs are for entrepreneurship. These are not entrepreneurs. Studies show, there's a study I saw in Netherlands, doing business for good, that shows that Kenyans, we are not entrepreneurs. Kenyans, we are lifestylepreneurs. They call that something like that. And it's neither good nor bad. It's the truth, because we start business. Many people are starting a business because there's no jobs or there's no work, but they're educated. They've gone to school. So we keep looking at them through the lens of, of entrepreneurs, the lenses we're using to look at them will not give us the right solutions. Let me start by saying that. That's why I laugh, because answering that question becomes more complex every time I hear it. Maybe we need to ask another question. Why are SMEs not making it to their 5th birthday? Who are the ones that are making it to their 5th birthday? Do we need another lens to look at them through? Do we need to find other capacity building methods? For instance, at Passion Profit, we don't insist on bookkeeping the old ordinary way for bookkeeping. We've come up with our own system called the Profit Fast methodology. And it's nothing new, really. My mother used it. I'm 50 years old, so if my mother used it, you can imagine. Because the audited account system that we're using, every time an SME, who we call an SME, looks at it, it will show they did not have profit. So why don't we find a way to make them profitable sooner? We say that it is good to be patient for growth, but don't be patient for profit. Because patient for growth means that you're going to put the proper systems, find the right people, find the right value proposition to get out there with, so that you're selling something that will come back with a profit. You can use that profit to leverage and get some capital. But if you continue using this system of the regular profit and loss accounting, then it's not going to help that SME, because right out the door, they don't have the right value proposition. So I think the lens that we're using to look at them and the techniques and metrics we're using to measure them are skewed. I've been in this space for 10 years in Nairobi and 10 years prior in the US. And who an entrepreneur is in the US and who an entrepreneur is in Kenya is very different. They are taught the same things. How can that even help anything? You understand? So when it comes to what are the risk is definitely capacity. The education we have, the capacity that we have is to get a white collar job. Those white collar jobs are not there. We need capacity to get us to be profitable as soon as possible. And profitable as soon as possible doesn't mean millions of shillings in the bank. It means that the money we are putting in is coming back. We need to be willing to do simple things, try simple things that are going to work, as opposed to insisting on things that are created for other kinds of businesses to make it work. So that's my simple opinion.
Yeah, thank you, Frida. It does make sense in terms of, keeping the same lens of one size fits all kind of an methodology doesn't work, because the challenges, the risk for each individual business also varies, because factors are different for each one of them. And the one that you mentioned, like, at the beginning, like they have access to finance in terms of they have money parked for being given to these SMEs, but probably the processes around it are so stringent in terms of
the processes around them are crazy, ridiculous. Yeah. Let me justify by saying that, because you want to see records of somebody who is starting. They don't know how to keep those records. We are talking about innovation. We are talking about new problems that we need to solve, but you want to see all this kind of history. They don't have money to do it. So that money is going to stay in the banks. I think financial institutions really need to think of more innovative ways of reaching the SMEs, because yes, they have the money. Yes, the SME needs money. And maybe we should stop calling them SMEs and find a new word for each group that needs the money. Might be helpful, because there are SMEs who get it, you understand, but it's just too broad and wide, and then you feel guilty when you're talking to the ones that are getting it right, but there's so many not, and the ones that are getting it wrong, it's not that they're ignorant, it's just the information they're being given is not for the problems they need to be solving. So I think and why? Because we start with the blanket of SME instead of realizing this, there are different levels. They can't get the same capacity building to help all of them.
True, very true. I mean, we need to, as we were talking, even Gregor said, like there has to be collaboration in terms of you have means to give out to this sector, but then point is you're not making the processes or your approach to deal with them very specific to that segment. You're just generalizing it. So generalization might not help. A customized approach is what is required at this point in time. Thank you so much, Frida, for your thoughts. And now I'd like to move on to Saurav. Saurav, your thoughts and views about the SMEs in Kenya, and how do you think the challenges, most of the challenges that are coming up right now, maybe, I mean, from an insurance lens also, if we can do something about it, some thoughts around it.
Right. Thank you, Sarita. And I think I may sound almost like a parrot, because I'm going to echo what obviously my co-panelists have already mentioned. And I think you see the common theme that has emerged from comments from all three of them is the complexity, right? That SME and MSME is a very complex area. And so that means even the risks that are faced are very complex and vary across the different range of SMEs that are in that space. And I mean, just to reiterate and to echo that message, I can talk from some of the experience that we have had Britam at working with SMEs in terms of various kind of financial services. And you'll see from these examples that they're so disparate. Like, for example, one of our research told us that in Kenya, for especially the micro enterprises, eviction from their premises is a major risk. So these are small shopkeepers. They're talking about eviction either by their landlords or by maybe the government authorities, like being evicted from their premises because maybe they are not, they don't hold the rights to that property, or maybe there are some issues in the rent payment. So eviction, for example, is such an interesting challenge and risk that has come up. Similarly, I think human resources we have talked about. So this is now more for, I would say, small and or maybe small and medium enterprises, which is around human resources. So they talk about skill gap, that how it's difficult to find the right staff for the kind of work they want to do. And related to it is loss of that staff. Like, let's say if you have found the right staff and you've lost them, so you're actually losing a lot of that organizational knowledge as well. So the reason I brought up these examples, because obviously the broader, the more general examples have been talked about, which is access to markets, access to credit. But these specific examples tell us about the complexity of the sector and related complexity of the risk faced as well. And which means that any mitigation measures have to take into account that complexity, and really that mitigation has to start with a better understanding of the sector and the risks faced by the sector. Sarita.
Thank you, Saurav. That kind of helps in a way summarizing. So if I can just pick key things from our discussion right now, focusing on the risk that this sector faces. Let me not say SME, because that's a very generalization of the statement. But if I say so, like, we have to have a very different or a customized approach or thought towards looking into this segment to analyze the challenges each individual business probably goes through. It might be difficult, but nonetheless, it's worth trying. That is one part. Second, capacity building has also come across as one of the important points that this sector needs to do, maybe upskilling of their manpower, so that helps them in not only mitigating the risk, but also probably in the risk coping mechanism, so they can cope up better and can move on forward instead of just dropping the ball and just not doing the business. That is one part I see. The other, I think, is challenge is like informality of this sector is a big challenge, which is overall from how do we address this segment becomes the point of question to be pondered upon. How do we handle, because majority is very informal, and given that informal structure for them, even if the money is there as an access to the finances that is there, but the processes around it are also not simple enough for them to access it. So that is again adding on to the problem or all the more. And lastly, I would say collaboration between the institutions, be it financial institutions, be it government, be it other players in the market, is one of the key things that will help address some of the challenges this SMEs face and will help them move forward. This was a nice, interesting discussion, getting in the insights from you all on the risk and challenges the sector faces. Having said that, now that we know some of the risks that this sector rather faces, if we can just move on to discuss around some of the mitigation strategies. Again, here, no one size fits all kind of a strategy can work. Something might work, something might not work, something might work in other country in the continent, might not be in Kenya, but nonetheless, I would like to have your views on that. But at this point, I would just like to request our audience, if you have any questions, please feel free to add on to them to the chat feature, and we will pick them up as and when possible. So now moving on to the next section, as I said, which we will discuss on the mitigation strategy, I'd like to start with Frida. So given that you know the challenges, you have explained it much better, the local challenges, but as per your experience, what do you think that the SME should do to kind of better handle, let me not say completely mitigate, but how do they better handle their situation in accepting and dealing with these risks?
Thank you very much, Sarita. I can talk on what I've seen working in the 10 years that have been, more than 10 years that I've been in this space is starting with assessments and not assumptions. Many times we start with assumptions, SMEs this and SMEs that, and I'm passionate about them, so I tend to lean towards them. So the key thing is start with assessments, not assumptions, and start with assessment based on a metrics. For instance, at SME Founders Association, we start with an assessment to see, are they making cash? Because what are the three key things that we want to ensure that a business owner is doing is, one, they're generating revenue consistently. Because if they're not generating revenue consistently, they can't move. So the first thing we ensure is that they're generating revenue consistently, and we have 5 metrics that we check against that, we assess. The second thing we do is that they have order, because if you're generating cash and you don't have order, it's going to get chaotic, you're going to lose it. And in ensuring that you have order, again, we have 5 matrices that we look against, which 2 are making sure that you have the right people. And first of all, that you, the business owner, you are the right person for this business. So you have the right people and you have the right processes to ensure that this consistent cash carries on. Now, one of the things that is not talked about often is that we don't have the right people working for us. And the right people working for us goes back again to the kind of education we have and the kind of graduates that are coming into the market. So hiring somebody for 30 days is not sustainable for an SME. So what we have done, we have a workforce pipeline. And with our workforce pipeline, you're able to contract, you contract SFA, and SFA contracts, a young professional for you who can come in twice a week or once a week. So they don't have to work 30 days. So that model of 30 days and then a salary is not sustainable for an SME. So when we assess, we find out what is the order situation like against the 5 matrices, and then we look at their stability. Stability means that you're generating cash, you have the right people, you have the right processes, and that your cash is profitable using the profit fast methodology. Your cash is profitable because every time it comes in, you're able to separate it in the 5 accounts as we teach in the profit fast methodology. And when you have those 5 accounts, any business owner can understand that statement compared to the income statement, profit and loss, which is great, but historical accounting. A small business owner needs to know live how much money do they have, how much is theirs, how much belongs to the guy who's going to evict them out of the building. So this helps us to assess them in 15 areas when they come in, and we look at which is the lowest, which is the biggest one that needs help. All right, we call it what is the fix that you need out of the 3. We don't try to fix everything. A lot of capacity building comes to tell us a lot of things that we need because the business space is dynamic, but you won't need all of them all the time. So what we focus on, what do you need most immediately? And as we're fixing that, we fix the other, and we have them, we have them in a community. So we have found that works, having the peer learning and having assessments and not assumptions, and understanding what is the most immediate fix and fixing them. It's just like a car. When you take your car to the workshop, the sound you think is wrong is not what needs to be fixed. But when it is fixed, then the other parts can be fixed. They don't try to fix everything at once, especially when you don't have the money. So kind of something similar to that. So we found that using assessments instead of assumption works, using community learning works, and using community learning works because 1, peer learning, 2, having a pool of community where you can hire from so that you're not using your money just for paying salaries, every month, when you can have somebody work twice a week, and this same person working twice a week for you can work for somebody else for twice a week. Then that way we are moving. So it has to be a collaborative thinking, different people working together to provide these resources for the famous SME. Let's call them the business owner.
Yeah, I think it's better we kind of use that terminology. We can start with
I
that.
fear that word SME.
No, but that's pretty insightful in terms of what you mentioned. Like it's always, most of the time we start with the presumption that this is not wrong before even delving further and analyzing if
And we
that
assume
really
they
is the
don't know how
problem.
to keep books. And to be
Exactly.
honest, Sarita, the bookkeeping thing really annoys me because personally, I don't like numbers. These accountants have gone to school to learn accounting. I just want to run a business and I'm expected to learn these accounts the way they know and they went to school for it. I don't want to be an accountant. I just want to make money and feed my children. So why am I being given that stuff to learn? No, I can keep books using a very simple way. I keep the books and then the accountant can do the audit and get some money and we are all happy. So the capacity building, the capacity building systems we are using drive me crazy. And Vivian, I'm sorry, all the financial
No,
literacy
you're
stuff
not
is
going to
great.
get any money from a bank in that case. You have to do your part and understand your business. Sorry.
And now we do our part. Vivian, if you allow me to jump in there, Vivian, we do our part, but our part doesn't mean we have to be an accountant.
No,
We use
no.
the profit first. We use the profit first
Yes. Understand
methodology.
your
It has
cash
been
flows.
proven.
Yeah.
And the profit first methodology is a cash flow and saving system.
Exactly.
Because in Kenya, we don't save money. So for every sale, you make a profit. And that simply means every time you make a sale, you have 5 accounts where the money goes into. The first account is the revenue account where the money comes. Because this famous SME has something called mobile money. So the money doesn't reach the bank. But with our system, the money must first reach the bank. And then it goes for profits. It goes to the profit account. Then it goes to the owner's pay. And then it goes for operations. And it goes for taxes. So this way, every time they look at their accounts, their bookkeeping, they have 5 accounts that show them how much money is in each of the accounts. They don't have to be paid a salary after 30 days. Some are paid after 2 weeks because they're people that are generating money all the time. Some are paid after 2 weeks. Some are paid after 30 days, but most of the time it's 15-day cycles. The goodness with this for the bank is the bank will see the real-time money. Many times the bank asks us for audited accounts and they go and find a clever auditor to write up stuff for them. But with the 5 accounts, there are banks now that have twin accounts, and with the twin account, all the money is coming into the bank because sometimes the statement is showing you have 1 million shillings today and then there's a big gap. What happened? There was no business, but where did the 1 million shillings go? You see, so we need systems that can show real-time cash that are simple, that the SME can know their cash flow. I'm not saying do away with the accountants always stone me. No, I'm saying have a system where the founder, the business owner, understands the money coming in, how much belongs to them, how much needs to go out, and then every month do the auditing thing so the accountant can do that for the bank to understand.
Yeah,
but the business of
Yeah.
So Frida, if I may,
Correct.
actually, I agree with you, Frida, and that's the type of training we do. I think we'd be insane to try and do profit and loss and balance sheets. So we also make it practical. So I'm glad to hear that you do offer that. And really our goal is that when the business owner is going to a bank, they should be able to understand whether they're making money or not. And what you're saying, put the money you make from your business into your business account, even if you're taking it out, So absolutely agree with you on that. They need practical and simple solutions. Yeah,
Great.
but
Simple
they
is the
do need to
keyword.
understand their financials. Yeah,
We don't refuse that. It's just that there are many ways they can understand their financials. It doesn't be a cake whether the bank wants it. That's all we're saying. And it's working. Yeah.
Great. Thank
So
you
the
so
key
much,
thing is to
Frida.
understand and the bank understands so that the bank can trust them enough.
Right. So the key point is assessment. That is the key point you're trying to drive, which is totally understandable and agreeable, I guess. So Vivian, on that note, I would like to know your thoughts on the governments across also are trying to support this segment or the small businesses, let me say that ways, in various through credit guarantee schemes or various other measures, and especially in the past 1 year we have seen. So what, as per you or as per your experience, do you think has worked, has helped them, help the segment per se to come out of some of the challenges, or are they working or not? And if anything else that needs to be done, not only by the government, but other entities as well, even as private sector, when we talk about what else should we do to kind of uplift this sector? If you can just add on your thoughts on that.
Okay, no, very briefly, I think a lot can be done. And I think, firms like Frida's, I think, are also doing a lot in that regard. Across different countries, what we are seeing, for example, if I take Nigeria, is governments trying to, or the central bank, I'll focus on the financial sector because that's what I specialize in, is, for example, banks the central bank compelling banks to give a certain amount of their loan to deposit ratio to the real sector, because that, they said 65%, and if you don't do it, you're fined. And that's so that the banks don't invest in securities, which is risk-free. They've done the same in Egypt, where they've said you have to give, say, 25% of the loans you give have to be to this sector. And more important, you don't need financial statements. You can use credit scoring. And that's one of the things we do, and our capacity buildings to banks we do, so that you use different factors other than the financial statements to assess the viability of a business. Because as Frida says, at times entrepreneurial capacity is not necessarily measured by how good their books are. Other areas I think we see have worked, and I'm thinking of places like South Africa at times, it's just trying to have, say, incubation services. But I still feel, in a way, and that's my personal view, that entrepreneurship is really not for everybody. Some people are good entrepreneurs, others are not. And if some of the statistics you raised around businesses failing, if you look across the world, those are standard, even where SMEs have, or business owners have, a lot of support. So there is a lot to be provided. I'm looking at governments like access to markets, which is a big challenge that a lot of them talk about. Is there more that can be done around trade fairs or organizing those? And again, we get banks, because we find that they're very good aggregators, to organize, say, things like market, international trade fairs, so that their clients can go to different markets and expand it. So there is a lot of scope for different players. And I'll leave it at that.
Great, thank you so much. Yeah, that makes sense. And your point on not everyone can be entrepreneur is pretty valid. Some people are doers, some are followers. There's nothing wrong about it. It's to each on his own. So it's absolutely fine. And thank you so much for your inputs on the point that how Nigeria government is doing or Egypt is doing. It's a kind push they are giving from their side, so that these institutions kind of spread their risk and they are not just being risk averse, which is a good way to go there. Thank you so much on your thoughts. Gregor, now just moving on to you. Again, as I said, there is no one size fits all strategy for sure, even in risk mitigation. Still, your thoughts on what best could be done by these SMEs to handle the risk or challenges they are facing, and if you can share some experiences from other developing nations where you have worked, and share your thoughts on that. Thank you.
Yeah. Thanks, Sarita. I will come back to that in 30 seconds. Let me just two comments on the discussion of the last 10 minutes. I think there's things we can learn from the very basic microfinance movement. Still the approach when extending loans to micro businesses in most countries, and by far the highest loan amounts on an aggregated portfolio, is still cash flow based lending. And how that works is that basically a hopefully well-trained loan officer goes to these businesses, small businesses, and assesses the financial liability of this business in a process, him or herself. Because there usually the expectation is there are no balance sheets, there are no proper paperwork. And so I think this thinking has to be extended also to, let's say, the higher steps of SMEs, where of course this methodology doesn't work anymore, because it would be too burdensome to do these kind of assessments in larger businesses. But I think the thinking still applies, and that is it doesn't work if we go to these SMEs or those micro businesses and say you have to provide proper financial statements, you have to have a paper trail, and then you can get a loan. This will lead to nowhere. And the same thing, a similar example is with collateral. Still so many banks and MFIs and other financial institutions rely very heavily on collateral, regardless if that collateral at the end would be even executed, you could even execute it. Often private property, it's not really able to execute it if the loan goes bad, because the legal system doesn't allow for it. So really kind of acknowledging the true situation and finding methodologies and systems to make things work, instead of kind of posing demands and requirements to businesses that they will not fulfill in the short run and also not in the longer run. That having said, I would like to drop some thoughts on actually what the insurance industry could provide in terms of risk management to SMEs, or the role the insurance industry could play. And I think the overarching thought there is that the insurance industry should move from being just an insurance provider to really being a risk management partner. What does that mean? Firstly, I think we have discussed that they truly have to understand the risk and risk management needs of those very different subsegments of SMEs. We have discussed that before, so I'll leave it here like that. Secondly, what we often see is that it's very difficult to strike the right balance between standardized and tailor-made products. Again, when we look at microinsurance product, they usually work in a way that they are very standardized and kind of fulfilling the basic needs of individuals to some extent. But this usually doesn't work anymore for SMEs, because SMEs are more complex, and yeah, they are in these different sectors. They are in different positions of the value chain, locations, etc. So these very standardized products don't really bring value to SMEs. On the other hand, it's difficult for an insurer to do tailor-made products, because therefore the SMEs are still too small. I mean, that's what they would do for corporates. So I think one key here is to really find this right balance, which is difficult. It's not easy. One way to do that, at least partly, is to have the right partners and the right aggregators that are actually close to these SMEs and have frequent touch points to the specific segment of SMEs you want to target with a specific product. And overall, I think one pathway to the future is to better bringing together technology, risk management, and insurance. And I think we do see quite a lot of examples popping up there, where this happens in a way that that is not that let's say not that difficult, in a sense that you immediately understand the added value to that. For example, in the logistics sectors, there are lots of examples working with telematics. There is one example when we are talking about perishable cargo. So when we talk about export-oriented businesses and SMEs, for example, Parcel is one of these examples where they basically use sensors and IoT technology to basically supervise cargo that is perishable. For example, cooling chains need to be adhered to. And at the same time, with that technology, it's also easier actually to insure this cargo, because if there is a breach, then the parties involved exactly know when that breach happened, what exactly happened, how long it was, and who is responsible for that. And that is one, for example, in that example, one case or one challenge we see, and we've seen also in the past, that if a breach there happens, the different parties involved fight who is responsible. So I think we need to to look at these examples that I think we also can see a lot of them at the African continent, and I think Kenya as a front runner with many of these technology solutions, be it, for example, of course, mobile money, has a lot of potential there.
Thank you, Gregor. Yeah, that really makes sense. And if I can just pick up again from your discussion, like, customization, complete customization might not be possible given the kind of challenges are there. It's not that people have not tried to do, or organizations have not tried to do it, but there are challenges. Having said that, it's worth giving a try by identifying a particular subset under the overall segment and do something. If it works, the resonance, once it comes in, then probably with the spread of mouth itself, people will be more inclined for solutions like insurance or any other kind of solution that supports them. And having said that, your idea of an insurer being a risk management partner is equally important. It's just not about selling a product, rather giving them a holistic solution which will help them come out of it. So that really makes sense. Thank you so much for your thoughts on that. And just moving on to Saurav again. Saurav, your thoughts on how, Gregor has added something from the perspective of insurance, but how do you think as a private sector and insurer, what else can be done to help? Yes, insurance is definitely one of the mitigation strategies for the SMEs, but till now for the segment, if we talk about the small businesses, we talk about not much groundbreaking work has been done. So how do we approach it? So your thoughts on it, please. Thank you.
Thank you, Sarita. And definitely, I would be the first one to admit that insurers have a very long way to go. I think even to better understand the sector before we can start offering really appropriate solutions. I think we need to see in terms of broader private sector, right? And I think it was Gregor who mentioned in the beginning and talking about collaboration. And I think that's what needs to happen. How I see the role in a private sector can play is really around innovation. So I think private sector can bring innovation through, let's say, technology, trying to address issues such as information asymmetry. And I love the work that is happening in Kenya, right? So we look at players like Soko Watch or Twiga Foods, who are aggregating these businesses and providing them an excellent platform. And this platform is addressing some of those risks that we were talking about, such as access to market, right? Like you even look at Jumia, which is an e-commerce platform. I know people like who have started making a livelihood, for example, by importing. I know someone who's importing perfumes, let's say from UAE and selling them on Jumia, and that has become like a really viable business. So that is an example of innovation that I'm talking about. And that's where now financial service providers come in, and not just insurers, right? To try to work with these value chain partners, these really innovative companies like Twiga Foods and such, because they have access to, I think you mentioned that one of the challenges with SMEs are they're informal, they're very difficult to reach. I think that challenge can be addressed by working through these innovative tech platforms. And second, they provide access to data, right? So now we already know that some of these platforms have started offering innovative financial services like working capital financing. So because they know like what is the weekly or monthly turnover for a small business, so they are able to provide these solutions at a much better pricing than what a commercial lender would do. So similarly, why can't, as insurers, we tap into the same kind of information and see what are the risks and design products that are now suited and are informed by data? Like example could be, let's say, agri businesses, right? In agri businesses, if you understand, there is a seasonality. So agri businesses have these seasons of high income, low income. So how can you design products, or let's say premium collection is at the time when these agri enterprises are cash flow rich. So that is, I think, the role of what private sector can play through collaboration and innovation to help this sector a bit more. Yeah.
Thank you so much, Saurav. Yeah, it does make sense. We have to, as even in earlier feed, I said, we have to put a different lens to look into this sector or the businesses to customize the solutions and come out with it. And innovation definitely is the key there, because the traditional methodologies might not work in providing the right kind of solutions there. So here at this point in time, I'll take a pause, and there is a question that was directed to you and Frida on what insurable risk for business owners are currently not being addressed. I think you have addressed that to a certain extent. If I can just go to Frida quickly for your thoughts on it, that what insurable risks from the business owners are currently not being addressed that you think can be worked around. Some thoughts on it, quick thoughts on it. Yeah.
I'll give that back to Shama. I'm not in the insurance industry. I don't like
Okay.
commenting on things I don't know, and I'm not
No,
going to
not
pretend.
okay. Let's just put it this way. Otherwise, so
Yeah.
some risk on which you see there is a kind of there is no solutions other than, I mean, one is insurance can definitely play one of the roles, but other things that you see are not being catered to. If at all, some thoughts on that.
I would ask the question differently. What are the existing insurance categories that could benefit SMEs but are not? Because why start other ones? SMEs need health insurance. SMEs need the same insurance that you need for directors. So why not start with what is known, especially because when an SME is the famous SME, when a business owner is sick, the business suffers. So instead of trying to innovate something, why not find a way to ensure that when the business owner is sick or when the family is sick, the business owner is taken care of before we jump into something new? The other thing is, how can we make sure that one thing that when the business owner is sick or they pass away, there's trouble. If they're not able to pay rent, and I know there's education, there's insurance for education. Is there insurance for capacity building? We're talking about capacity building. So before jumping over to newer things, why not find out the existing ones that they're not taking? And the insurance people might not like me very much for saying this, but I'm known to have a big
No,
mouth.
I think you have touched upon the
Because many
right
times
point
we
there. Yeah.
hear, we are told many times that insurance is for the rich people. And then at the same time, we are told SMEs are not the rich. So I'm like, no, I don't think, I refuse that though. Insurance is for anybody who wants to mitigate risk. And SME is the most risky person here. Everybody hears SME and they go like this. I think there's a lot of opportunity around protecting the SME. So why don't we start there with what is already existing instead of trying to jump over the fence? Thank you,
Great.
Sarita.
Thank you so much. I think you touched upon the right point. And if I may say, we actually are trying to do something like that. There are products available in the market. So we are definitely working on it. But I would like to invite Saurabh at this point in time. Saurabh, you can add on your thoughts. And there is one particular question for you as well by Camila. That what about risk reduction measures? Is Britam incentivizing these among clients as client SMEs, and as it cannot only reduce premium costs, but also can make them more resilient? So would you like to share your thoughts on that?
Right. I mean, just to add to what Frida was saying, insurers, we are always accused of pushing products that we never understand our clients, and we keep hearing insurance is a push product. So I'm not going to push an insurance product in the discussion today. And I would just say, I think Frida rightly mentioned, like all the risks that we are talking about, these risks apply to businesses as well. So it's to say what is the best way to mitigate all of these risks, from health, from interruption, from supply chain risk. But I won't be pushing a specific product today. But now specifically to, I think Camilla's question around risk reduction. So Gregor brought it up, and I think this is a really interesting topic. I would say that a lot more can be done. From Britam's perspective, what little work we have done is on the health side. So our focus is a lot on health side, and we provide like a lot of health insurance solutions for SMEs, for business owners and their staff and themselves. And I would say one small risk reduction initiative or intervention we have adopted is really working with different kind of hospitals to provide screening. As a simple example, screening for, let's say, optical cases, or screening for lifestyle diseases, with the idea being that some of these conditions, if they are caught at an early stage, you can prevent aggravation, and you can prevent a lot more health increase in health cost expenditure plus increase in your insurance premium. So that is, I would say, like an example from a health side, but I'll definitely pick a lot more that can be done on the business insurance side, like some of the risk reduction measures that can be adopted. Yeah.
Thank you, Saurabh. Thank you so much. Thank you so much. And I think we are now heading towards our last segment, wherein, the current situation that we all are in, we cannot really not discuss about it. As we talk, the pandemic everywhere is still unfolding, and there is no sight of it ending soon. And we all know what kind of impact it has created on the sector we are talking about, and the challenges the sector is facing. So just as a brief view or insights or thoughts about what do you think? I mean, what is happening is something we can't do much about it. They are dealing, there are measures being taken, businesses are dealing with it. But for future, how do you think these businesses can be future ready, if I may say, to deal with such situations, such eventualities if they happen in future? Then how do they prepare for it now so that they are ready to deal with it? So I'd like to just start with Saurabh, if you can just share your thoughts on it.
Right. I mean, see, I think in terms of pandemic, just from our Britam's experience, we have seen major impact, right? So like I was talking about earlier, that we work with the number of SMEs, and we have seen the cash crunch was a very, very pertinent problem. In fact, a lot of organizations came to us for premium holidays, or what you would say premium payment plans, where they wanted to defer premium payments. So I think we have seen that risk from our eyes. We have seen that experience. I mean, going by broader sector, we know, we were just looking at this report that almost 65% of these businesses reported decreased in income because of the pandemic, right? So, but on the other side, pandemic has taught us a lot of lessons as well. I mean, all of us will appreciate the digitization that has happened because of COVID, right? Even this webinar. I mean, webinars have become super popular after COVID, is it not? So that is just to give you an example. All of us are working from home. So in the same way, I think there are learnings even from SME side. What I would really urge is that financial planning bit, right? That how do we learn that financial planning bit? And some of the very quick thoughts would be like, how does a business owner separate personal risks and business risks? I think that is an area that has not been addressed as much, because obviously these businesses are often run by one person or a family run, and sometimes that line between the personal and business risk becomes very blurry. So I would say that a good step would be to learn from pandemic is to have better financial planning to be able to address such kind of shocks in future. Sarita?
Thank you, Saurabh. Thank you so much. And yeah, it does make sense. I mean, as you said, financial planning is the key. Hopefully, to a larger extent, the pandemic has kind of created that awareness of saving, which is a part which we talk about in this part of the country, or in Kenya also. The savings culture is little less, which probably with the pandemic people have gotten into that habit of saving, and that should also be a good start, I would say. If not, something is better than nothing is the point there. So I'll just move on to maybe Frida next. If you can share your thoughts, how these organizations should be better prepared to handle such kind of situations in future.
Thank you so much, Sarita. I'm trying to think of the best way to put this out there, because I think COVID has just unveiled again that the way we are setting up businesses is not correct. So it has given us another opportunity to rethink how we are running business and the things that we are doing. And because when we talk about financial planning, there was financial planning before COVID, all right? And when we talk about taking care of risk using insurance, there was that before COVID. So one thing that has stood out for us is that collaboration is extremely critical to be able to survive any kind of crisis. And collaboration, because collaboration gives you a bigger spectrum, collaboration gives you a bigger group to leverage, to leverage different things, whether it is people sharing their office spaces when they could, people using office space at different times so that, they can keep up the rent going, using virtual, and even digitization. Digitization is something that has been there. Especially, I say that because I lived abroad and I've lived at home. So I think, again, back to the capacity builders, we need to be conscious of what is happening, not just in our locality, but globally. Because at Passion Profit, we pride ourselves as people that are helping business owners build ventures that are world-class. So we started using Zoom in 2017. And why did we start using Zoom? It was an interaction, all right? There was interaction because of the political crisis. So we had to think, what are we going to do if people cannot come to the community, people cannot come and visit with us? So that's when we discovered Zoom. We went on coaching to Zoom. We can reach more. So COVID has given us that opportunity to think beyond our borders, and that is something that must never stop. As we build these businesses, let us look for opportunities for collaboration, all right, so that we're looking across the supply chain, we're looking across the value chain. Like I shared earlier, we share staff, we share spaces, we share. When there's more of us, there's more for the insurance company, all right? So I think for me, it would be collaboration and looking at the complexities and not making assumptions.
Great. Thank you so much, Frida. That really makes sense. And now I'll just move on to Vivian. Vivian, your thoughts on how we should be future ready to deal with challenges, especially the businesses we are talking about.
I agree with all the points raised, and collaboration is particularly key. A lot of IFC's work over this time has been on capacity building to smaller businesses, and we did this to financial institutions. What we found is that despite it being virtual, it actually gave the institutions an opportunity to connect with their SMEs. And what we took the SMEs themselves through was adapting their business models, like what Frida talked about, sharing business spaces. How do you cut your costs during this time? How can you diversify within a field that you know? We also took them through, communicating with their different stakeholders, your suppliers, your buyers, your bank, because we saw a lot of our banks faced high NPLs, and if customers had borrowed digitally, they simply disconnected the line. So it's just that don't run away, tell the bank you're having problems. It's also for the banks to understand that they have to support this business so that in future they have the clientele. Digital was key, selling online, marketing your business online, and also e-commerce. So I think that level, in a way, COVID has made things very difficult, but it's really opened up different avenues of doing banking or doing business, particularly for smaller businesses. Another area that I think is important, and that really speaks to practical support, is around ask banks to do what we call ecosystem banking, meaning that look at your corporate, which maybe survived a little bit, and look at the suppliers and distributors in the supply chain, and how can you sort of work with banks to provide them with financing, to provide them with support. And this is where I think insurance also can play a role, because you have these different businesses with different challenges. One other comment I'll make is because we always do research even before we offer advice to banks and talk to the smaller businesses, one thing that did come out very clearly is that insurance is an area where there's a lot of scope to do more on, particularly for businesses. The ones we found they had were around personal accident or vehicle insurance for their vehicles. And I think this is linked to what the banks provide. So, and cost is the main issue they cited for not having insurance. And then second was that they didn't think they needed it. But you look at how banking sector, particularly in Kenya, has evolved, going digital, just trying to connect and understand the needs of the clients more. There is a lot of scope, I think, for the insurance business as well to go through it. We normally don't think about insurance, we go straight to the banks, but you do play a key role in mitigating some of these risks.
Great, thank you so much. Thank you so much for emphasizing the point on insurance playing a key thing, which most of the time the challenge we face is people, the upfront is one, cost is definitely they want say, and they say we don't need it, we have other revenues, but they don't realize the kind of support insurance can provide. So hopefully will reach to the stage where people will come forward to take insurance and not being just sold. So thank you so much for your thoughts on that. And lastly, Gregor, your thoughts on how we should be future ready to deal with such pandemics or any kind of eventualities in future. Yeah, thank you.
Yeah, thank you. And that's really just adding to thoughts that have been shared from Frida, Vivian, and Saurabh. Especially with COVID-19, I think it's a difficult question because we are still in the middle of the crisis. The pandemic is ongoing, and even though I guess we all have become somewhat hobby epidemiologists and virologists, it's still very hard to predict how long this will still be ongoing. And this is, on the other hand, a decisive question when it comes to managing risks. For example, if you look at the government support programs that have been designed in many countries specifically for SMEs, they are of course also time constrained because fiscal space is limited, and it remains a question what will happen in many countries when these support measures run out. In summary, I think you cannot really fully prepare for such a mega crisis like COVID-19. I think we all have to be aware of that, and there will be not that silver bullet that kind of saves us or the SMEs from any risks that come from such huge crises. What you can do, though, I think, is manage those risks well that can be managed well. We have, I think, provided many examples of that during this webinar, and maybe two additional thoughts on that is the digitalization of business models. That is something that's been quoted quite often for SMEs to see what part of their business can become more digital. Of course, that is maybe easier for some sectors. It is probably very difficult if you run a parlor shop or a massage parlor. Then it's difficult, but some businesses definitely can look that way. And I think my final thought is what often SMEs and also micro businesses are suffering from is that they are part of very intransparent and very fragmented value chains. And I think to look at these ecosystems and to try to make these value chains more transparent and not as fragmented as they are is a huge opportunity. And there are examples. I think Saurabh has mentioned some from Kenya when we are looking at digital platforms, for example, that could be either basically sector agnostic or very sector specific platforms. For example, in the logistics sector, in the construction sector, I have seen very promising examples that basically look at bringing all these stakeholders of that specific industry together and make them visible through, for example, app solutions, and also make it more predictable for the different actors in these value chains on how their revenue could be. And yeah, I think that are solutions that pop up more and more, and I think they can help to make the whole sector of specific SMEs more resilient, which also then helps to have a longer breath in such really crisis where it's very difficult to get prepared for, such as the COVID-19 crisis.
Thank you, Gregor. And yeah, your point is actually valid in terms of when you can't do much about of a crisis of this nature, you might as well cope with it, face it, adapt to it, and adopt new, you be open to adopt new methodologies. Like, digital is something, the kind of usage is happening right now because of the pandemic. It was there earlier also, but it was never leveraged up and right. So we need to be a little open in our thought process and adapting to newer things, or maybe existing ones and utilizing them. So your thoughts are pretty valid there. And on the point of, this brings to the point that such kind of situations will keep coming. So we need to be better prepared with our risk management strategy. Generally, we focus on the part of, say, financing or other areas which are more visible. But the points that you, Vivian, Frida, everyone mentioned about capacity building is one which also will help people to be more risk aware and help them come over such situations much better or become more resilient. And of course, collaboration is definitely a key. So it's not only about the small businesses taking care of their businesses, but we as an overall community, we as individuals also can contribute, in helping them, coming together and helping them to survive. So that goes without saying. Thank you so much. Thank you so much for your thoughts on that. So I'll just take a few more minutes to answer some of the questions that have been raised, and I'll just pass it on. Gregor, there's a question I would like to direct to you. Is just give me a moment, please. So there is a question that is by Naziri, that is, what is the role of regulator in enhancing insurance uptake? Any case studies where regulation has significantly enabled growth? Would you like to share some thoughts on that, on your experience?
Yeah. So I think firstly, those regulators or those regulations that actually do not hinder certain things, that's maybe the putting the thought a little bit the other way around. So often we see barriers posed by regulation, and when we look specifically at extending insurance to SMEs, often it's the case that regulation that, for example, prohibits the bundling of certain products can be an issue, or also certain partnerships. We often see regulations where, for example, there are strong limitations on what kind of partnerships you as an insurer can do. And that makes it even more difficult to reach the specific target groups of SMEs. On the other hand, on a, let's say, bright side, I think many insurance regulators understand their mandate either implicitly or explicitly to also develop the market. This is something which has not always been the case, and especially also coming from the banking segment, where this is still a bit different. But in the insurance sector, I think many regulators do have that mandate, and they do different kinds of learn and test approaches, like sandboxes, etc. And yes, of course, there are certain regulators who are more progressive than others. But yeah, overall, I think the important thing when especially looking at SMEs is really going through the specific regulation and see what kind of barriers exist, and do these barriers exist for a good reason. There might be good reasons why to have that barrier and why to hold on to that, or could there be more flexibility in enabling certain business models to better reaching SMEs?
Thank you. Thank you so much, Gregor. I think we have reached to the end of our session now. I would like to take this opportunity to thank all our panelists for taking the time out of their busy schedules today to be part of this interesting discussion that we had. Thank you so much, Vivian, Gregor, Frida, and Saurabh. And I would like to thank all our participants, audience, for actively participating and sharing their thoughts. We will be coming up with another session on another interesting topic pertaining to SMEs soon. So kindly look into our social media handles to know when it is happening. And thank you so much for all the organization who are at the back end help. We have helped us in this putting across this webinar together. Thank you so much, and wishing you all a good rest of the day ahead. Thank you so much. Thank you so much.
Thank you, and bye-bye.
Bye-bye.
Thank you. Bye-bye.